Good morning, everybody. It's my pleasure to open the summer meeting of the Czech National Bank Board member with analysts. The Bank Board is represented today by Mr. Vojtěch Benda. As traditionally, our meeting will start with the presentation of the new macroeconomic forecast, which was the base for the yesterday's monetary policy decision to raise the main Czech interest rates by 25 basis points to 0.75%. The new outlook of Czech National Bank will be presented by Karel Musil, Director of Macroeconomic Forecasting Division. The other speaker of the day, the speaker ready for discussion, is Petr Král, Executive Director of Monetary Department. Now, let's move to the presentation, and I would like to give the floor to Mr. Musil.
Thank you. So, good morning, everybody. It's my pleasure to present the new macroeconomic forecast that was prepared here at the Czech National Bank. Before I do it, I will speak briefly about the assumptions that are linked to the forecast. Then I will continue with the macroeconomic forecast itself, and at the end I will briefly speak also about the comparison of this new forecast with the previous one, and at the end I will discuss three monetary policy simulations that we prepared. Before I start, let me also highlight the fact that the summer forecast is traditionally extended. I mean that the forecasting horizon is longer by 1 year, and we are covering right now also 2023. So let's move to the assumptions as the first block of the presentation, and I will start with the outlook of the behavior of the foreign economies. Here we assume that the recovery of the main trading partners for the Czech Republic will be driven by reopening of services, and that will be also supported by savings that were forced during the lockdowns in the foreign economies. It means that the second quarter GDP growth in the euro area will be about 11%, and then it will gradually decline. Overall, for this year, we assume that the foreign economy will grow at about 4.5%. Next year, the growth will further accelerate. This picture is also influencing the outlook of the price dynamics in the foreign economies, and it's clear from the picture that the price pressures in the industrial productions are exceptionally strong right now, and this is driven not only by the increase in prices of oil or in general commodity prices, which is captured through the energy components, but also it somehow reflects the strong demand for industrial productions, which is captured through the contribution of the core component of the PPI dynamics. At the same time, given the recent communication of the European Central Bank, it's true that there is no significant change in the accommodative stance of the foreign monetary policy, which means that the 3 months interest rate stays in a negative territory through the whole forecast horizon, and at the same time the shadow rate will increase just gradually, which reflects that still the European Central Bank continues with the quantitative measures or quantitative policies. The second set of the assumptions that are extremely important, especially for the domestic economy, are linked to the pandemic situation. Here we assume that there will be an increase in new cases of COVID during the summer holidays. Then there will be some response of the government, and some of the restrictions will be slightly tighter, but this will be linked mainly to the restrictions related to the movements of people. Nevertheless, and despite the fact that the stringency index will slightly increase during the summertime, there will be no significant impact on the consumption of the households. Then for the rest of this year, we expect that the stringency index will gradually decline. That will be in line with higher vaccination, new forms of medicaments for the COVID, and also the total immunity of people here in the Czech Republic. The stringency index will decline at the end to the level that is not really important and for the economy, and there will be no big tangible effects on the economy overall for the rest of the forecasting horizon. Related to the pandemic situation, also the fiscal policy implementation is important, and here we assume that the government consumption will rise this year. Indeed, that will be valid also for 2022 and 2023, and that will be related to the, especially this year, expenditures that are still related to the COVID situation, which means expenditure for testing, for COVID vaccination, and these areas. At the same time, we also assume that there will be positive fiscal impulse for this year, and this fiscal impulse will further support especially the household consumption. The fiscal impulse was relatively strong in the first half of this year, and as the government measures that are related to the COVID will gradually fade out, and we can also assume that at the end of this year these measures, or some of these measures, will be finished. The strength of the fiscal impulse is lower and lower, and next year the fiscal impulse is even slightly negative. And it means that there is this phasing of the support measures by the government, and this negative fiscal impulse will be softened by extraordinary increase in pensions. If we take all these assumptions and put it into the forecast, it means that in the second quarter, the headline inflation was close to the upper boundary of the tolerance band of the Czech National Bank, and the inflation will further increase significantly above the upper bound in the second half of this year. Then it will start decline, and it will return back to the inflation target where it stays also in 2023. This return to the inflation target and indeed staying close to the targets is significantly influenced by the fact that there is quite a strong tightening of the monetary policy, indeed reducing the accommodative stance of the monetary policy in both of the components, which means there is an appreciation of the Czech currency and at the same time also increase in nominal interest rates. To complete the picture, the monetary policy relevant inflation is slightly lower than the headline inflation, which means that there is an impact of the increase in excise duties at the beginning of every year over the forecast horizon. When I highlighted the fact that there is a further increase in headline inflation in the second half of this year, it means that there are several contributors to this development. First of all, there is increase or forecasted increase in food price dynamics that reflects the fact that there is increase in global and domestic agriculture prices. At the same time, we have already observed the acceleration in fuel prices that will continue in year-on-year dynamics. And later on, at the end of this year, there will be also an increase in growth of the administrative prices that will be linked to the increase of the energy prices for the households. At the same time, there is still relatively high contribution of the core inflation to the dynamics, and we forecast that the core inflation stays at about the current levels until the end of this year. The core inflation is still somehow driven by the fundamental factors that are currently in the economy. These are especially the growth of the costs and also the strong demand in the domestic economy. On top of that, there are also additional factors like increased contribution or increasing contribution of the imputed rents, impact of the summer holidays, and at the same time also the effect of the reopening of the economy was quite important, as we can think about it as the situation when the producers, especially in services, could increase the prices in the second quarter to compensate or to narrow their margin that were negatively influenced during the previous lockdowns in the domestic economy. When I highlighted the importance of the growth of the costs, it's clear from these pictures, and in the first half of this year, the total costs grew, and the growth was indeed increasing, and that was driven mainly by the contribution of the imported price in both of the components. That was the energy prices, the increase in oil prices, and also the extraordinary increase in foreign prices. At the same time, the contribution of the domestic economy to the growth of the costs increased as well. That was the second quarter when the domestic economy was reopened, which generated the fundamental or increased the fundamental pressures in the economy. We believe that the costs will grow also in the third quarter of this year. And the situation will change at the end of this year when the imported prices turns into the anti-inflationary contribution to the costs, and the anti-inflationary contribution will be driven mainly by the appreciation of the currency, but at the same time, as I highlighted at the beginning of the presentation, there is a decline in foreign PPI dynamics that will contribute to this. This will help to stabilize the growth of the costs at around 2%, at around the equilibrium that will ensure that inflation will stay close to the inflation target at the end of 2022 and during 2023. The story is quite interesting also for the domestic component of the costs, and that is clear from the lower picture, and the dynamics can be characterized by the fact that still the domestic costs are increasing, so adding to the inflationary pressures, and that's linked indeed for the next couple of quarters, and that is driven not only by the gradual increase in fundamental wage growth dynamics, which is indeed additionally supported at the beginning of the next year by the increase in nominal wage, but also the reopening of the economy in the second quarter added to the fundamental pressures, and that it's related to the reopening using of the savings that were forced during the lockdown, and in this case it's captured by the positive contribution of the price of the capital. At the same time, the reopening of the economy in the second quarter allowed to improve the labor efficiency, that is somehow compensating or reducing the inflationary pressures. I highlighted during the previous slide that really the labor market is quite important in the dynamics of the fundamental pressures, inflationary pressures in the domestic economy, which means that during previous quarter the labor market somehow cooled. Given the reopening of the economy, the situation is somehow stabilized, and indeed we expect that the labor market will gradually overheat again. It means that the general picture about the labor market is such that the cooling of the labor market was not complete, and still the labor market is generating inflationary pressures in the domestic economy. That is reflected in the dynamics of some of the indicators, some of the observations that we have. And also it means that the unemployment will stop to decline and start to grow at the end of this year. That will be driven by the increase in labor force. At the same time, we are very likely at about the peak in the unemployment rate, and the forecast is to gradually decline. Quite similar picture about the gradual improvement of the labor market is captured also in the dynamics of the fundamental wages that will gradually increase at the end of this year, and indeed will converge to the 5% growth, which is the equilibrium growth during 2022. The development or dynamics of the non-market sector wages is slightly lower, but overall still the effect of the statistical effects are adding quite high volatility to this observation. The improvement of the situation on the labor market means that it will positively influence the sentiment of the consumers as one of the main driver of the recovery of the domestic economy. When I return first to the second quarter, so the observed data that we have already, it means that the Czech economy managed to renew its growth in the second quarter. Indeed, the growth was at the heights throughout the whole history. And indeed, when comparing this forecast with the release data that are available from the Czech Statistical Office 1 week ago, the forecasted growth was slightly higher than the official number. Nevertheless, this does not change the story or the picture about the situation in the Czech economy, that the forecast believes that the growth will continue by 4.5% in the second half of this year, which means that in total the Czech economy will grow by 3.5% during this year. Next year, the growth will further accelerate and will be slightly higher than 4%. From the structure, it's obvious that the recovery in the economy will be driven really by the household consumption. At the same time, there is a big contribution of gross capital formation, so it means investment or investing activity and the changes in inventories. And also towards the end of this year, there will be an acceleration of the exports of the domestic companies, and that will be indeed the impact or the influence of the solution to the problems with the supply chain and limited production, not only here in the Czech economy but also in the foreign economies. When we check in details what is behind the recovered household consumption, then it means really the reopening of the domestic economy allows to recover the consumption, and there were set of the factors that contributed to this development. One of them is the impact of the pandemic, so really the reopening and possibility to consume will just simply increased the dynamics of the consumption, which is the red contribution in the lower picture. Then there is also an impact of the savings that were generated during the lockdowns and the households started to use it. That's the green contribution. And in the opposite direction, especially at the beginning of the next year when the government measures are removed, then the fiscal impulse will contribute negatively to this development. Interesting is also a picture about the dynamics of the gross capital formation as one of the components that is also driving the recovery of the domestic economy. And indeed, that will really help to recover, despite the fact that there are still some ongoing issues in the production and supply chain that are negatively influencing the domestic economy. What is clear is that the fixed investment will contribute by higher magnitude towards the end of the year. That will be driven mainly by the private investment, and at the same time still there will be ongoing investment activity in the government sector. Nevertheless, the overall picture about the dynamics is significantly influenced by the change in the inventories. That's the yellow contribution in the upper picture. And here to analyze what is behind that and what is the outlook of these dynamics, that helps the lower picture. First of all, there is some contribution of the inventories in retail, which means that before the reopening of the economy, there were some excessive inventories that were built by wholesalers and retailers, preparing for the reopening of the economy, and this contribution to the inventories disappeared quite quickly as the consumers are willing and able to consume. The second big contribution to the inventories is related to the industry, and that it's linked to the problems with the global supply chains. And in the Czech economy, it's related mainly to the manufacturing, or especially to the automotive industries and the sectors that are linked to the automotive industries. It simply means that because of these problems with the global change, some of the production is not finished, especially when we check the Škoda cars that are produced and not finalized. And this is increasing the inventories. We expect that the problems with the global change will be solved and the situation will improve at the end of this year or at the beginning of this year, which means that the unfinished production will be finalized and at the same time it will be exported, so that will temporarily help to increase also the exporting activity of the domestic producers. Indeed, the exporting or the temporarily higher export together with the inflow of the foreign capital and quite strong domestic demand will support the appreciation of the domestic currency, and indeed the appreciation is throughout the whole forecast horizon. At the same time, there is another important factor that will help to strengthen the currency, and this is the increasing interest rate differential of the domestic interest rates against the foreign one, and that is the reflection of the increase in the domestic nominal interest rates. To complete the picture, we set the first quarter value of the exchange rate to be at 25.4 crowns per euro, reflecting the improvement in pandemic situation, the fundamentals in the domestic situation, and the sentiment, positive sentiment in the global FX markets. Then the currency will appreciate and reach at about 24 crowns at the end of 2023. One of the drivers for the appreciation was the increase in the nominal interest rates, and it's clear from this picture that consistent with the forecast is a rise in the market rates, and that is from the middle of this year onwards. Indeed, this rise in the rates reflect really strong fundamental inflationary pressures that are coming not only from the domestic economy but also from the foreign economy. During the next year, still there is a rise in the nominal interest rates that will ensure that the interest rates will return gradually to the levels that were in the economy before the COVID pandemics. Also, this increase in the nominal interest rates just simply ensures that once the inflation declines to the inflation target, it stays there, and it means that there is a significant tightening of the loose monetary conditions that are currently present in the domestic economy. Right now, I will quickly compare this new forecast with the previous one that was generated or prepared in spring. The comparison is, I would say, quite obvious. The headline inflation is higher compared to the previous forecast, indeed, because of all the components, with the exception of the food. Important contribution there for the upward revision is coming from the core component of the headline inflation. A similar picture is for GDP growth. And the higher growth for especially this year is linked to the earlier and more pronounced lifting of the shutdowns in the domestic economy, and also quicker recovery in investment activity. Overall, better situation on the labor market means that also the wages in business sector are higher when we compare this forecast against the previous one. And when we check the currency, then the Czech crown is stronger compared to the previous forecast, which is driven by the observation that we have already available from the beginning of this year, second quarter. Then also improved competitiveness of the Czech exporters, as the price dynamics, the PPI dynamics is really relatively high right now, which provides competitiveness or competitive advantages to the Czech exporters. And also the impact of the increased interest rate differential plays significant role, which means that the domestic interest rates are higher than it was in the previous forecast. When we check what are the main driving factors behind this revision, it's for sure the positive contribution to this revision of the initial state. So it means the observed data that indicates that the environment is more inflationary, the domestic one, the foreign one, that we have newly available compared to the previous forecast. Then there is also slightly higher outlook, short-term outlook for the inflation, and at the same time also the foreign environment is pushing for higher domestic interest rates. That it's mainly through the higher foreign prices that are increasing the imported prices for the domestic economy, and also there is some impact of the revision of the shadow rates to be slightly higher. In the opposite direction, there is a contribution of the expert judgments, and these are related mainly to one-time effect for the inflation. So it means that we remove from the persistency in inflation the impact of the one-off effects of the summer holidays, and at the same time also the increase in prices, especially in services, because of the reopening of the domestic economy, and the dynamics will be reduced by this. The last part of the presentation will be devoted to the monetary policy simulations that we prepared during the forecasting round and discussed with the bank board together with the baseline scenario. The first one is related to the slower interest rate growth that we just try to simulate and illustrate the situation when the growth of the interest rates is lower than it is in the baseline scenario. Indeed, the increase in the interest rates, I mean right now the red line, expect that there will be just an increase of the interest rates by 25 basis points at every monetary policy meeting towards the end of or in the second half of this year. And in the first case, we expect that this gradual increase in the nominal interest rate does not influence the anchoring of the inflation expectations. This increase is communicated by the central bank, and it means it's fully credible. The bank is committed to follow this trajectory. Given these features, it means that the impact on the overall inflation is quite negligible, and indeed this simulation shows that the gradual increase of the interest rates should not be a problem for the economy. In case of the second simulation, still the interest rates are increased by the same pace, but at the same time there is a worsening of the credibility of the monetary policy. There is a temporal anchoring of the inflation expectations, and it means that the inflation will increase further, and in the second half of this year it can reach almost 4%. Well, it means for the monetary policy that there must be a strong, quick response of the interest rates in this situation. So it means at the beginning of the next year, in 2022, interest rates are growing and they are above 3%. But even such a strong tightening of the monetary policy does not deliver the inflation to be close to the inflation target over the monetary policy horizon. And once the credibility, the anchoring of the expectations is renewed, then the inflation is returning back to the target. But this simulation illustrates that the bank is ready to tighten much more the monetary policy conditions if it's necessary in the case of the temporarily anchoring inflation expectations. The last simulation is related to the stronger exchange rate, and here we just simply assume that the Czech crown will be slightly stronger in the fourth quarter of this year compared to the baseline scenario, let's say because of improved situation or sentiment on the financial market in line with the good country fundamentals. This means that through the appreciated exchange rate, the imported inflation is lower compared to the baseline scenario. Inflation is returning back to the inflation target quicker. Inflation reaches the inflation target also earlier, and it means that the tightening is delivered through the exchange rate, and there is no need to follow the trajectory of the interest rate given in the baseline, and the nominal interest rates are lower compared to the baseline scenario, which is sufficient to reach the inflation target for the overall inflation. So that's everything from my side. Thanks for your attention, and we can continue.
Thank you, Mr. Mrstulil. Now it's time to open the discussion. And before we start, let me just repeat the traditional rule. If you wish to put the question, just send me some short message via chat. It's enough to send me a simple word question or simple letter Q, and I will give you the floor. And before I will see the first question in a chat, I would like to ask to Mr. Benda just for short opening of our discussion.
Thank you very much. Good morning, ladies and gentlemen. This is a great pleasure for me to participate on this meeting. As you know, this is a traditional event, and unfortunately, so far still is in this distant form. Hopefully, in a foreseen horizon, we will have the opportunity to meet again face to face, but still we have to accept the reality as it is. We assume those meetings are very useful for us because it helps us to clarify, to explain, and to interpret our assessment of economic situation, to explain and clarify our projections and also our monetary policy decisions. And you are very important intermediators of our decisions, of our steps, because you are important part of our communication to the rest of the market. So now, floor is yours, and if you have any questions, don't hesitate and please ask. Thank you.
And I can see the first participant in a discussion. It's Mr. Schindel. Mr. Schindel, floor is yours.
Thank you very much. Good morning to everyone. Thank you for the presentation and this opportunity. I would like to ask about the monetary policy implications from this stronger exchange rate simulation. In other words, I would like to ask how the bank board view the FX or interest rate channels, which part is more welcome in current situation, and what would be the consequences of the, let's say, stronger currency for other stabilization tools of the Czech policy, particularly regarding the real estate market and the mortgage market. So thank you very much.
Well, if I understood correctly, your question was how important for us was the assumption regarding the financial stability issues in our monetary policy decision, right? Actually,
yes, but I would also ask about whether the Czech National Bank board would be also okay with the scenario when the monetary policy is tightened mainly by the exchange rate instead of the increase in the policy rate.
Sorry, the connection is not perfect, so I have a problem to understand sometimes. Actually, I think the broad majority of the bank board is familiar as fine with the baseline scenario of the exchange rate development. And of course, that's why actually we publish the trajectory of the exchange rate, not only of the interest rate, so that once you see the actual exchange rate deviates from the projected path, it gives you a sort of guidance. How would the bank board assume the further steps of the monetary policy decisions in line with the projected trajectory of the interest rates? But of course, it's not a robotic action, so we always have to take into account other aspects that are important. But my personal view on the exchange rate development now I can unfortunately present because we still maintain this blackout period of the personal views on the development.
Thank you. I can see the next question in a chat, and let me read it. How can markets understand yesterday's monetary policy decision to raise the repo rate by 25 basis points when the new forecast implied the hike by 50 basis points?
Well, each particular forecast is a sort of suggestion, in fact, and some sort of guidance for the bank board, which consists of 7 people with personal views and personal assessment of the risk balances. And so finally, we can say the increase of 50 basis points would be considered for the whole of third quarter. So we still have some scope for the further increases in the ongoing meetings until the end of this year. But I think that the message was relatively clear, that the scope for further increases of interest rates is here. We are still in a relative expansionary mode of monetary policy, given the fact that the interest rates are fairly below the observed and expected level of inflation. And so what we do now, in fact, is just pulling back the foot from the accelerator and, in fact, returning the economy to the gradually returning to the monetary policy conditions to the regular state, which would correspond to the economy on the steady state growth close to the potential, which should be where it should return relatively soon. But I think that whether the increase of interest rates was 25 or 50 doesn't play such a big role, because the main message was that the increase of interest rates will very likely continue until we see some very unpredictable event, which I don't expect it will happen.
Thank you, and I would like to ask you put next question. Just send me some message to the chat. Oh, I have the next question again from Mr. Schindel from Citibank. Mr. Schindel, the floor is yours. Yeah, we are sorry, we cannot hear you.
You are on mute.
Never mind, maybe Mr. Schindel has a problem with connection. I will read his question from the chat. The forecast still envisage the weak recovery of fixed investment. Assuming the fixed investment surprises positively, would it represent a disinflationary risk relevant for the monetary policy?
Let me start by saying hello to everyone also from my side, and thank you for this question. The new forecast brings a picture of recovering gross fixed capital formation being driven by 2 bold factors. The first one is the ongoing lively investment activity in public sector, partly co-financed from the EU funds, which are approaching the final part of the programming period of the current framework, and later there will be some additional financial support from New Generation EU Fund and Recovery and Resilience Facility. So there will be a relatively robust and stable contributor from this public sector investment segment. The new forecast expects some stronger recovery in private investment compared to the previous forecast, which is driven by the fact that the economy was in a somewhat better shape during the first half of this year compared to the previous assumptions, and we can expect that the earlier and more aggressive reopening of the economy will restart the economic activity somewhat more quickly compared to the previous picture. That's why we do not now believe believe that the inflation, that the investment picture will somewhat modify the basic story about the inflation going significantly above the upper boundary of our tolerance band in the near term, and subsequently close to the inflation target, being supported by the tightening of monetary conditions. If there is some surprise on the investment side, we will be thoroughly analyzing this new message. But currently, we are very happy and very robust with this investment profile and its implications for total costs and investment outlook.
Thank you. The next question comes from Mr. Jose Silveira from JP Morgan.
Hi, good morning. Thanks for the presentation and for the Q&A. I wanted to ask two questions. So the first is, could you explain a bit how you build your assumption for intermediate good pricing, basically foreign core PPI? I know that in the past it was common to take consensus estimates also from abroad, but I imagine that given the unique situation that we have now, you are probably making some sort of assumption about what happens in the future. So maybe if you could clarify if you assume shortages and the log jams to last for, say, another 6 months or 12 months. So any detail on that would be great. And also I wanted to ask board member about the discussion yesterday, if he could provide some color about what new arguments were brought to the table. So we know from Governor Rusnok Q&A yesterday that the idea of hiking 50 basis points had a bit more support than before. So what were maybe the arguments that made people more inclined in that direction? And also, if on the side of those who prefer to stay on hold, what were their arguments? If you could provide some color on the two sides of the debate, what changed since the last time, that would be great. Thank you very much.
So we'll take the first question. Jose is very familiar with the Czech National Bank's forecasting model and forecasting procedures. So let me just remind you all of the fact that some time ago we switched from the previous version of the core model, DSG G3 model, to the G3 Plus model. And during this process, we also moved from taking exogenous inputs regarding the foreign economic developments and replaced this procedure by in-house creating the assumptions and outlook for exogenous variables, including foreign economic developments. That's why this external block of the G3 Plus model, together with expert view of our sectoral specialists, is able to generate a consistent story regarding the most important foreign economic variables, such as PPI growth and its breakdown into the energy and core segment, which is consistent with foreign GDP and foreign cyclical position of the economy. We take into account also the setting of the monetary policy and global commodity prices. So this is an integral part of our macroeconomic projection exercise, and the new core model is helping us very much in interpreting the actual developments and help us to build credible future scenarios. I would like Karel to add something if he could.
That's one of the change that we did, and at the same time to be able to run this type of analysis and forecasting for the external environment. We also developed a bunch of the techniques that are aimed at the nowcasting and near-term forecasting, so utilizing the currently available indicators and other variables that will help us to really improve the near-term outlook, and then consistently using the core projection model or the foreign block of the core projection model to have the consistent view about the outlook for the foreign economies.
So, Jose, thank you for your question. First of all, I would like to say that I appreciated your comment, your report from the morning, the CE inflation outlook, the good, the bad, and the transitory, because not only I'm a big fan of Sergio Leone's spaghetti westerns, but also I like the relatively good in-depth analysis of the price development in CE region. So we also read from the other side of the barricade. So regarding your question, actually, I would not say the situation has changed very much since June. The biggest change was probably the increased outlook for the inflation, which increased compared to the previous to the May forecast. The second was the debate and the assumption of the uncertainty regarding the further development of the pandemic or epidemic situation, while still in May we were just emerging from the heaviest lockdown we have observed since January 2020. Now we are more, the majority of the bank board is more positive regarding the future development, and it seems there is a less uncertainty for the rest of the summer and autumn. So, and actually, I think that the majority of the bank board really assumes that if the measures, there were some imposed during the summer and autumn because of the some unexpected increase of new cases, then given the relatively broad vaccination and new methods already in place, and the fact that the economy, the people and the companies have learned better how to cope better with epidemic measures, so we are not in the risk of some deep lockdown as we were observing last autumn. So the impact, potential impact of this anti-pandemic or anti-epidemic measures will not be that markable or will be negligible for the economic activity, and the recovery will likely continue. And this is probably also the explanation for the two board members who voted for no change, because that is the reasoning behind is their assumption that these risks still are prevailing, are still in place. So I think broadly we are not in disagreement that the normalization of the monetary policy should continue. The difference is only how we assume the potential risks stemming from the further development of the some potential pandemic measures on the Czech economy. That's, I said, the majority thinks that the risk has decreased since May, and from the publishing on the previous forecast. And also, it seems that the inflationary pressures stemming from relatively robust labor market, which remained almost intact during the crisis, and was already very tight in the beginning of the crisis, still are in place, and so the monetary policy has to provide some preemptive steps to normalize the monetary policy conditions. And of course, as Mr. Rusnok said, Governor said that there were more board members considering eventually possible higher rate hike than 25 basis. Finally prevailed the opinion that it's better to deliver to the market more predictable, a more understandable way of tightening of monetary conditions, and 50 might be probably assumed as some sort of panic, which is not. We are not in this situation, but we of course have some sort of different opinion how fast the tightening would go or not. But I think this can be assumed as I know that one of our first hikes were named dovish hike that was published previously, that was delivered previously. I think this was a relatively strongly hawkish hike, despite it was only 25 basis, because that it was followed also by a relatively strong commitment that we will continue with this until the end of the year, at least, probably very likely in the foreseen horizon in 2022. Of course, but the world is unpredictable, and we are not gods. We are experts and economists. We are not prophets. So we cannot assume that some unexpected situation could arise and we might have to reassess our statement. But until we see this commitment for a further tightening of monetary policy is relatively strong. Thank you.
Thank you.
So I cannot see any other request in a chat to raise a question. Yeah, I see the request from Maidan from Bank of America.
Hello, thank you very much for your presentation and very useful Q&A session as always. I would like to have a follow-up questions about your comments from Mr. Benda, your comment just now on the board decision and the commitment for further hike. Can you comment a bit on the assessment about the anti-inflationary risk to the forecast and how that fits into this hawkish hike comment that you just said? Relating to that, coming back to the research department scenario of Euro-Czech sensitivity scenario, is that symmetric if you have a potential weakness in Euro-Czech, in the Czech crown? Does that apply in similar fashion? Thank you very much.
So thank you, hello, and thank you for your question. Actually, I would mention one of the anti-inflationary risks to the forecast would be probably the second quarter flash estimate of GDP, which came out a little bit slower than was previously expected. But then, of course, it depends how each particular member assumed this as an important or a less important event or economic information. So I personally was not in euphoria from the fact that the first quarter was a touch higher than was earlier expected. Then I was not pessimistic because of the less pronounced growth in the second quarter envisaged by the flash estimate. So this is something that probably was also taken into account on the decision or in the comment. It's hidden also in the comment that how assumed the majority of the bank board the balance of risks and what was behind their decision. And the second question was.
I will take the second question. Thank you, Mai, for that. Let me start by saying that until now the Czech koruna has been behaving quite nicely, and after short-lived depreciation at the beginning of July, it appreciated back to 25.4, which is very close to the near-term forecast of the exchange rate, which we set several weeks ago at 25.4. But we were asking ourselves, what will be the possible outcome of the publishing of the new forecast, together with the decision to make another hike, and together with relatively strong monetary policy communication, as nicely described by Wojciech as dovish hike and hawkish hike. And in that context, there will be some potential short-term increase in volatility of the exchange rate, and another factor playing a role is the improving sentiment on the global financial markets, which could, together with domestic situation, lead to the higher increase on the financial account of balance of payments compared to what is in the forecast. That's why we prepared this exchange rate scenario, which is describing the situation on the appreciation side. So we believe this risk is somewhat asymmetric, but not huge. And this asymmetric view on that risk was also taken account by the statement of the board, and the exchange rate risk was mentioned among potential anti-inflationary risks.
Thank you, and I see that Mr. Silveira has an extra question.
Hey, sorry, I don't want to monopolize the meeting, but it's just since there is a bit of space, it's just a quick question. I would like to know what are your expectations for the housing market and for the development of credit, like mortgage credit in particular. There is a big boom at the moment. I don't know the market much in detail. Maybe there is some technical element. I'm suspecting, like in other countries, that part of this excess savings that we saw during the pandemic, some people don't want to spend it. Maybe they now have a deposit to buy a house. I don't know. So I think some of the money is leaking into this market. Do you have some expectation about how this will develop? And also, importantly, because this is indirectly included in the CPI, inputted rent is 20% of core. This should also matter for monetary policy. And do you consider tightening via these other tools that you have on the macroprudential front, for example? If you could comment. Thank you very much.
Thank you, Jose, for your question. Actually, of course, it's very difficult to predict further development of the mortgage market and real estate. But of course, the monetary policy decisions are always accompanied by the statement and the position of the macroprudential policy too. We have to take it into account. Sometimes they are in the contradiction, sometimes they go in the same direction. This is exactly the moment when the monetary policy and the macroprudential policy goes to the same direction, which in fact implies that the tightening of monetary policy is a sort of also helpful to fulfillment of the stabilization of the macroprudential policy. So, of course, it's very difficult to use it would not be appropriate to use this one instrument for the both. But this time, hiking interest rates clearly goes the same direction in the sense of calming the mortgage market. Because one of the reasons, of course, why the mortgage market is such a pressure now and why it's relatively hefty, it's because of the expectations of market regarding the further increase of interest rates. And the further we will climb to the peak, the earlier this, let's say, the pre-stocking will finish and will return to the normal stance. And this is something, of course, we did take it into account as well. But we also, thanks to the novel of the Central Bank Act, we have the more tools now in a pipeline we can use in order to reach the financial stability, and we will discuss it again in the autumn when we held the regular meeting at the financial stability report. Thank you.
The next question comes from Ms. Doan again.
Hello, it's me here again. I would like to ask about the new forecast and relating back to a comment you made in the presentation about the fact that the economy is now sort of back to the pre-crisis path, and there's a need to gradual tightening of interest rate back to pre-crisis level. So we sort of see that happening in 2022. In a longer term horizon, I can see you put in 2% for 2023, and the neutral interest rate for Czech Republic is sort of around 3% from your official estimate. If you could make some comments around this new forecast that you put in for 23, that would be greatly appreciated. Thank you.
Thank you for that question. The relatively strong front-loading of monetary policy tightening via interest rate hikes is necessary to ensure that the inflation, which is in the near term significantly above the target, will robustly return back to the target from above and will be close in the vicinity of the inflation target at the monetary policy horizon. But further on, after this task is done, we will have to ensure the price stability from both sides. And if we take into account the foreign interest rate outlook, we will have to be very careful about the width interest rate differential. And because the foreign interest rates are assumed to stay significantly in the negative territory until the very end of the current forecast horizon, we cannot continue with in the forecast. We cannot continue with normalizing interest rates to reach a policy neutral rate, which is close to 3%, until there is some movement from the ECB to hike their interest rates above zero.
And all clear? I'm sorry, all clear. And now I have a special request from Mr. Benda. He wanted to put the question as to you as our followers.
Thank you. I exploit this opportunity. We have the microphones here, so now I can make it as a dialogue. And I would very appreciate whoever wants to clarify or answer me. This is one of the issues with probably everybody in our society are discussing, and these are the relatively high increase of or acceleration of growth of producer prices, commodity prices. There are many explanations for this, given the shortages or bottlenecks in the foreign trade or the international trade and so on, and the recovery of the economies. Weak or relatively expansionary fiscal and monetary policies fueling also a sort of increasing of these prices. I would like to know your opinion, how much you think this is only transitory issue, and how much you assume this might be more protected in terms of the impact of the producer prices and commodity prices into how this going to feed through into the consumer prices, and whether this is just a transitory issue that will probably not last for long and should not be paid that much attention to this. Thank you.
Maybe I can start with some very quick thoughts on this. Obviously, this is not really my area of coverage, but I can see that the sentiment within our place is that initially there was a very big, subscription to the view that this is transitory. Recently, we look at some charts from some of the analysts in the bank, and they show a significant turnaround in commodity prices in the coming period. And it raises question mark about how confident you can be about this significant turnaround. Clearly, it's an expectation that things should normalize, but it's not really based on some previous trend that we had observed before. So I think this subscription to this transitory is getting some challenges. Thank you.
Thank you very much. Of course, there is a quite large dedicated part of the future monetary policy report, which will be published next week, dedicated to this issue. So you will be able to follow our discussion or our assumptions being behind our forecast and our decision. Of course, this debate was also relatively hefty on the bank board. How much particular members assume this is a very transitory or more transitory, or this has some sort of permanent effect. But of course, what's important for us are the inflation expectation being anchored, and every jump in producer prices or discussion about the elevated price growth in the world and in domestic economy can have some effect until the central bank shows the very strong commitment. We are doing our job, and we will going to prevent the inflation expectation to disanchor and increase further. And one of the reasons behind the hike was also the very cautious following of inflation expectations, not only of analysts, but also of the companies, businesses, and we see that in fact they started to increase relatively sharply in the recent months. So that was one of the reasons why this has to be taken very seriously in that sense that the central bank has to show strong commitment to fulfill its target and to act if it's necessary in preemptive way, not an ex post way. Thank you.
Just a technical remark, the box dedicated to that transitory permanent price pressures have been already published this morning, together with the summary of the report and together with the table of macroeconomic indicators.
So I gave you wrong information. It was already published. Sorry.
The next question is from Mrs. Doan about the labor market.
Yeah, maybe just a final one for me about the domestic situation. How do you assess your labor market forecast? What's the risk to it from here? Thank you.
To be honest, everyone in this country is somewhat surprised how mild was the reaction of the labor market so far to the previous lockdowns and shutdowns in the economy. One explanation for that is definitely the job retention schemes implied by the Czech authorities and finance from the public budgets. And we now identify that the cooling period of the labor market has come to an end, and we can expect that the labor market will start overheating again relatively very soon, which is consistent with our forecast of gradually accelerating nominal wage growth in business sector, especially, which is very nicely seen, especially if we adjust this variable, this trajectory by one-off statistical and other factors, and another step or another increase of the minimum wage will also somewhat stimulate nominal wage growth in the coming year. That's why we do not feel much worries or uncertainties concerning the development of the labor market in the coming months. Especially, we do not feel any anti-inflationary risks from that. If you look at the monthly indicators, the rate of unemployment has already started to decline, and we can expect that total employment will very soon return to the positive growth rate, and the unemployment will continue to declining, which will generate some significant contribution to the disposable income growth in the household sector.
Thank you, and we will return back to the Ms. Doan previous question. The question now is from Jaromír Šindel from Citibank, and I will read it for bad connection of him. So you mentioned that ECB negative rates to limit the return of CNB's monetary policy rate to the steady state. How does the more hawkish Fed and potentially lower euro-dollar than your assumption at 1.9 to 1.21 influence this view? How does the more hawkish Fed and potentially lower euro-dollar influences this view?
If I understand correctly, if the Fed became more hawkish, and ECB was there also mentioned, or no?
ECB negative rates to limit the return of the CNB's policy to the steady state.
So until we see some really change in the monetary policy views and the monetary policy steps from the major central banks, we can unlikely change our view on the interest rate trajectory either. So given the fact that the Fed even haven't started the talks about the tapering, so it's very difficult to say what we would do if they would really start to do some action, and it's very difficult to make assessment and personal assessment regarding the monetary policies of other central bank institutions. But of course, once we see that the ECB is returning to the normalization to the monetary policy, it should have some markable impact also on our forecast as well. But we are not empty island in the ocean. We have to accept the reality of the surrounding world, and also the policy stance of the other institutions, which are now in different cyclical situation, different situation of the labor market stance and so on. So that's why they deliver different monetary policy than we do, and we have to accept that. And these are the what if something happened. So if we see that major central banks are returning to the normalization of the monetary policy, then of course I would expect it should have some impact on the reassessment of our personal Czech central bank's monetary policy interest rate trajectory.
So I cannot see any other question in a pipeline, and I think this was the fantastic summary of today's session. If anybody would like to raise a question, you have the chance now. And because I don't see any request, let me to finish this session today. And thank you very much. You join us, and we will looking forward for November when we will see you with the new macroeconomic forecast for Czech National Bank. Wish you nice rest of the summer, and goodbye.
I would also contribute to Petra, and I would like to thank you for the very fruitful debate we had today, and hopefully you were not disappointed with the outcomes, with the answers we were providing you with, and we will stay in touch, and looking forward to the next meetings. Thank you.
Goodbye.
Thank you. Goodbye.